rates, prices, recession, oh my! These are the top topics on everybody's mind right now. And if you're a first-time home buyer, how does this apply for you in 2024? Buying and selling properties lately has felt like being sucked up in a tornado in rural Kansas and being dropped off in the colorful world of Oz. It's confusing, it's unpredictable, and at the end of the day, you just want to find a soft place to call home. Mortgage rates and the large increases have been a major factor in that confusion. Should you wait and see if rates are going to drop? If rates drop, are prices going to absolutely skyrocket? Or are rates never going to drop and only go up? Interest rates are important because they directly affect your monthly mortgage payment. The same property at 4% interest versus 8% interest can be a difference of hundreds, if not thousands of dollars per month. So, what is a buyer to do when no one can predict the future? You look to the past as well as to the current data, and here's what we know for sure. There's a long-standing relationship between mortgage rates and inflation. Basically, when inflation is high, mortgage rates tend to follow suit. There's a big misunderstanding that the Fed controls mortgage rates. They do not. However, the correlation comes from the relationship between the Treasury rates and mortgage rates. Mortgage rates tend to follow or mirror the Treasury rates. Here's a graph detailing that correlation from an article on the balance. You can see a definite relationship between what the Treasury does and how mortgage rates follow suit. Recently, the Fed has announced a pause on rate hikes now that inflation has slowed. And many experts are predicting that mortgage rates are going to come down too, like Aziz Sunderji, strategist at Home Economics. He says, the bottom line is that interest rates are likely to be lower, perhaps even lower than many optimists think in the weeks and months to come. This does not mean 3 and 4%, but perhaps it does mean the mid to low sixes, which will provide some relief. At the time of this filming, the 30-year conventional mortgage rate was 6.72%. For example, a home purchased for $350,000 with a 30-year fixed mortgage would have a monthly payment at 8% of $2,568. At 7% interest, the monthly payment would be $2,328, and at 6% interest, that monthly payment would be $2,098. Just by interest rates falling a little bit, it can impact your monthly payment by hundreds. So if you see interest rates coming down, houses are going to be more affordable. Yay! Or will they? As rates come down and buyers feel more confident about entering in the market, that means more competition. And when 2, 3, 4, or 8 people want the same house, what happens? Some people bow out. Others increase their offer, and thus prices go up. Many experts predicted massive price crashes for 2023, and it just didn't happen. In fact, they all adjusted their predictions midway through the year to a more positive one. For what it's worth, here's what experts are predicting for 2024. 2024 will be a smaller increase, and other years may be more. But my main focus is 2024 because there's so much that can happen this year that's going to affect 25, 26, and 27. There's still buyer demand. And as long as we have buyer demand, prices are not going to plummet. So let's talk about recessions. Dum, dum, dum. When was the last recession? Would it surprise you to hear that it wasn't 2008? In fact, we've had several recessions since then. The most recent one during the COVID-19 pandemic from February to April of 2020. Just a few months, according to an article on USA Today. Remember, a recession is defined as 2 consecutive quarters with negative GDP growth. So do experts think we're heading for another recession? Some still do, but those numbers have dropped, with only 48% thinking that we're going to head into a recession versus last year when it was 63%. Based on available information, it appears that interest rates are going to be easing up a little bit. Because of that, home prices are set to increase at a more normal rate. And a recession is possible, but even if it happens, it will be nothing like the big crash of 2008 and far more like the little blips that have happened several times since then that most of us don't even remember. I'm not here to say it's an easy choice, but I am here to bring clarity. With clarity comes confidence, and every single person should feel confident when they are buying or selling a house. Because, just like Dorothy said, there's no place like home. And while I don't have magic red ruby slippers, I do have some data that says right now could be the cheapest time to buy. I'm Lindsey Johnson, your resource for all things real estate. See you next time.